Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Wednesday, May 2nd, 2007, and the market was up once again. The S&P 500 gained 0.65%, almost a dollar here on the spiders. And I don't know if that's a closing high or not, but let's take a look. It closed at 149.65 on the 26th, so it looks like it was 2 cents shy of a new closing high from this move. But very impressive action the way it came down to that rising 10-day moving average. We saw that big volume without the further downside yesterday, which did turn out to be accumulation, and the market pushed nicely higher again today. So like I said yesterday, there was zero damage done to the uptrend with that one-day pullback. It just kind of brought some more short sellers in, and I've been looking at a few other websites around the internet, and a lot of people are out there trying to pick tops. And guess what? You're trying to do the hardest job there is on Wall Street. No one that I have ever met has been able to consistently pick tops or bottoms. The only people that can do it are called liars. And to waste your time trying to pick the top rather than focusing on the nice trends and finding that low-risk entry point is just that. It's just a waste of time. There's going to be those times when, you know, and because I'm saying this, tomorrow morning the market will probably gap down 2% and close down 3%, and I'll get a bunch of I told you so emails. But the point is, you know, 1 or 2 days of downward movement in a powerful uptrend do not justify taking short positions. You might get lucky once in a while, but that's all it is, because news and surprises tend to follow the direction of the trend, and clearly the trend is higher in this market. So how high can it go? Nobody knows. Anyone who tells you otherwise, again, they're just guessing or they're liars. But the path of least resistance is higher. This market is definitely extended. It's overbought. You can look at all your indicators, and they're going to tell you to maybe sell or to move to the sidelines. But the more prudent course of action is to, if you're nervous in here, don't sell short. Lower your share size. Tighten your stops. Be ready for a pullback, but don't try and guess when it's going to happen, because no one can predict the market. What we can do is we can look objectively at price action, pick our spots, and manage risk, and that's what trading is all about. So the market gapped up. That rising 5-day moving average, I said that we generally want to give the benefit of the doubt in the short term to the buyers if that's advancing. And once again, it proved that if you're selling short with a rising 5-day moving average, you're fighting the trend and you're making your job very, very difficult. The Nasdaq 100 also finished higher today after bouncing from support at that rising 10-day moving average and the prior level of resistance. So this market is doing exactly what it's supposed to do in an uptrend. In an uptrend, it's supposed to break out, and then it pulls back to the short-term moving average. Then the next pullback will typically come maybe to the intermediate term and then the longer-term moving averages. But right now the market is doing exactly textbook uptrend action, higher highs and higher lows. These pullbacks just so far have been just the pause that refreshes. No damage has been done, like I've said yesterday, and in fact we're very close to new highs for the year in here again on the Nasdaq 100. Looks like our support level, I'd say probably right now, I'd be concerned in the short term if it was to close below this high right here at about 46.15, so let's keep an eye on that. And upside, we've got to break through this 46.60 before we see new highs, and that's going to equate to multi-year highs. So no reason to be looking for any top in here. Don't look back and say, hey, there's resistance from 2000 or whatever, because no one knows where the resistance is. We know where there's the potential for resistance, but the market has a habit of just mocking those levels and continuing with the trend. And again, the trend is higher. Yesterday I said that this semiconductor index looked almost too good to be true the way it broke out, rallied up, pulled back right to that rising 10-day moving average. We had extra, bigger volume in here yesterday, and I thought that getting back above 37 was where the buyers would really prove that they are in control of the short-term trend. It is back above that level, back above the 5-day moving average as well. 5-day moving average declining, so maybe that means it needs a little bit more consolidation above this level for a day or two before it can really resume the upward momentum. But there's no reason to doubt this this movement here in the semiconductors. And the IWM, which had been which had experienced the largest sell-off of the markets that we follow here. Did come down, gave us a little bit of reason for concern by closing below that 81 level. But like I said on Monday, a lot of times those pullbacks just trap in more short sellers, and that's exactly what it's looking like in here, because we had a very nice recovery in the Russell 2000 today. That market was up 1.3%, gaining $1.06. And now for new highs, it's got to get back above 83. But there's nothing to indicate that that cannot be done. These are, again, all-time highs in the IWM, so continues to act good. Coming into today, we were short Raytheon at 53.50. I suggested lowering your stop to break even, so you should have been stopped out at break even in Raytheon. AEIS is a stock that I'd suggest getting long above 25 bucks a share. Let's go ahead and raise our stop in AEIS up to 24.65 now. AGIL, this is one of the few stocks that didn't follow through on the upside. I suggested buying it, I guess, right above this level right here, 745. But fortunately, I set a very tight stop at 733, so you should have only taken a 12-cent loss in shares of AGIL. HTLD, this stock I had suggested getting long above what level? $17.60. So should have gotten long right in here. And right now, I'd say raise your stop to $17.38. And we'd looked at China as a short sale under 765. That trade never set up, so no trade should have been taken there.